Private sector may be falling short on some accounts. Unique investors and individual investors with respect to the National Stock Exchange have grown threefold in the last 5 years, and the last 1 crore seemed to 9 crores investors, and the last 1 crore seems to have come from just last 5 months. The daily unique registrations that averaged 47,000 in October has jumped to 78,000 in January. Uttar Pradesh and Maharashtra are leading this surge, with almost a quarter coming from these two states, and Gujarat has fallen to the third place. What do you make of this? Just digitization and performance of the markets, or confidence in the economy as well?
So I think, Amit, first one is the realization in terms of stock market being an asset class wherein if you have invested wisely for long term, and if you have a little bit of elevated risk appetite, then this is going to be the asset class which is going to give you the best return. And even Association of Mutual Fund of India, AMFI, has said that amongst the common most 4 or 5 asset classes that a common person on the street has on his or her hand is, of course, best return is over a longer period is equity or mutual fund SIPs or lump sum investment. A good part about this number that you just mentioned is that most of the new accounts that have come in has come in below the threshold limit. That means tier 3, tier 4 and smaller cities is where large part of the population is wanting to become actively involved in the India's growth story. And my sense is that if we have a stable government post the outcome of election, then the trajectory is going to be stretched further on, and there'll be more and more individuals who would want to be associated with the India growth story and investing into either equity market directly with little bit of understanding and of course acceptance of high risk, high return kind of scenario. And along with that, mutual fund investment will also grow. This will possibly translate into lesser dependence as far as the FI sell side figures are concerned. We've already seen this in the recent past. FIs have sold lock, stock, and barrel, but the domestic institution had the liquidity power to face that selling pressure from the FIs. Had it not been there, we would have been possibly down and out like other emerging markets. But my sense is that this number is going to grow steadily, and that will support the domestic institutions as well.